Hello, and welcome to Market USA Federal Credit Union. We're excited to present to you part 3 of our 3-part webinar series, A Better Way to Buy a Home. I am your host, Kevin Somerville, Vice President of Business Development for Market USA. Now let's take a minute to see what we've recapped in parts 1 and 2. We covered, are you ready? How much can you afford? Getting pre-qualified versus pre-approved, deciding on the kind of home you'd like to buy, shopping for that home, and making an offer. Now in part 3, we're going to cover getting a home inspection, applying for a mortgage loan, getting homeowners insurance, and closing on your home. So if you're ready, let's get started. Now, once your offer has been accepted, you'll need to get a home inspection. It should be one of your contingencies. In most states, the purchase contract gives the buyer a certain number of days to conduct the inspections, which can include the home inspection, as well as pest, chimney, fireplace, and sewer inspections. If you uncover a major defect that you just can't accept, you're often free to back out of the deal. But again, you must make sure that the proper language is in your contingency contract when you made your offer. It's very important that you hire a reputable home inspector. We recommend that you get one that is licensed and has good credentials. Now, don't be afraid to check online reviews and to ask for references. We recommend that you attend the home inspection. However, you must let the inspector do their jobs first before asking too many questions. Also, confirm that they'll give you or provide you with a copy of a detailed report in writing when they're finished. If you're having a home built, try to hire an independent inspector that can complete at least 2 inspections during the building process to review things before and after the work is completed, such as your foundation, wiring, pipes, ductwork, insulation, and sheetrock, and similar work. Now, yes, we understand it has to pass code anyway as far as requirements are concerned. However, it's often that the inspectors can provide recommendations to you before it's too late. Let me give you an example. While building our home, my inspector recommended certain changes within my attic ventilation. Now, although it was up to code, the builder was receptive to my request, and they made some changes for us. Now, this may not be the case for everyone. However, it is definitely worth addressing. Now, once completed, the inspection report should tell you if the home is going to need major repairs. You then have to decide how you want to address the issues and discuss it with your realtor. Remember, if it's something that's really bad and the seller is not willing to fix it or share in the cost of repairs or negotiate the offer, in most cases, you can walk away from the offer that's pending. Of course, it's pending your contingency. So now let's take a look at your mortgage loan. If you got pre-approved for your mortgage, this step will be straightforward. However, choosing the right type of mortgage is the key in the home buying process. Now here we're going to address fixed rate mortgages and adjustable rate mortgages. Let's look at the fixed rate mortgage first. See, a fixed rate mortgage is a loan in which the interest rate on the note will remain the same throughout the entire term. Now, generally, fixed rate mortgages come in 10, 15, or 30-year terms and are the most popular type of mortgages. Now, over 90% of home mortgages in the US are fixed rate. However, there are adjustable rate mortgages. Now, Adjustable rate mortgages, also known as ARMs. Let me explain how this works. See, after the initial fixed period, the rate will change and adjust on a specific schedule. It's considered riskier than the fixed rate mortgage, but an ARM payment can fluctuate significantly. See, the benefit of taking out such a high risk uh, type of mortgage initially is number one, you want it for a short term. Number two, it generally starts off at a lower rate than a 30-year fix. But let me give you an example of an ARM. Let's take a 5/1 ARM. See, the rate is fixed for the first 5 years. Then it can fluctuate each year thereafter. And it can be very expensive, especially if the rates continue to climb. So when you're considering a lender, we want you to know that Market USA is a great place to get a home mortgage. Here are some reasons as to why. You can save money. See, unlike banks, credit unions are nonprofits, which don't have investors and stockholders. And because of this, we have options for all types of borrowers. We offer low lender fees, competitive rates, and a wide selection of products, including our first time home buyers program, which offers up to $7,500 in assistance. Now, our website has more details explaining these benefits. And as you go to our website, you'll also notice another program that's offered by Market USA, and it is called the Home Advantage. So let's review a few benefits our members enjoy when they use the Home Advantage program. With Home Advantage, you can search. See, search through most current online MLS lendings. Simplify. That helps you to save your favorite searches and get updates when new listings become available. And of course, save. Use a CU Realty agent through the Home Advantage program to buy or sell your home and earn a rebate. Now, the average rebate is nearly $1,500. To find out more about a Home Advantage program, just simply go to our website, marketusafcu.com, click on the Resource tab, then choose Home Advantage from the drop-down menu. You can also pause this webinar and take a minute to copy the link that's shown below. Now let's move on to homeowners insurance. See, your home will probably be your largest financial investment. It's important to buy the right level of homeowners insurance so that if there's a loss, you'll get reimbursed for as close to the full value as possible. Here's generally what you'll find: hazard insurance, personal property insurance, and liability insurance. Let's first cover hazard insurance. See, all mortgage lenders require home buyers to have hazard or homeowners insurance. This usually covers the property damaged from fire, wind, hail, and theft. Personal property insurance. Now, you'll also want to protect, of course, the personal property in your house. Most lender insurance requirements do not include personal property. However, it makes up much of the value in your home, and we strongly recommend some level of coverage. Then look at liability insurance. Most standard policies cover personal liabilities for injuries to others that happen on your property. For example, if your dog bites the postal carrier, a liability line within the homeowner's insurance should cover the cost of their medical bills and other damages. Now, here are some factors that may affect the cost of your homeowner's insurance. Example, you have geographic loss experience, and that is if an insurance company has multiple claims in your area, it could affect your homeowner's insurance. Types of construction on your home, such as brick, log cabin, siding. Then you also look at the types of protection in proximity. That is professional versus volunteer services, such as fire department and police. You also look at the house itself, its size and condition. Is it large? Is it small? Is it old or is it new? Then you have the type of content, what you have as far as personal property within your home. And believe it or not, your credit score. Your credit score can carry weight also in your premiums. The type of policy you choose, the size of your deductible, and most importantly, the insurance company that you choose. So you may shop around or bundle with your current auto insurance for additional savings. Now, Market USA also recommends that you consider our partners at TrueStage, TrueStage Auto and Home Insurance Program. So you can find more information about what savings TrueStage can offer and get a free quote by simply going to our website at marketusafcu.com, clicking the Insurance tab, then choosing Auto and Homeowners from the drop-down menu. Now the part most of us, of course, have been waiting for, closing on your home. See, the closing is the day when the seller receives the check and you, the buyer, receive the deed to the property. Generally, this is also the day that you get the keys to your new home. Now, as a recommendation, at least 3 days before closing, both you and the seller should receive a copy of your closing disclosure, which states the final terms. It tells the seller how much money they will pay or receive at the closing, and it tells you how much money you may need at closing. Compare this with your original loan estimate. Now, at this time, this should give you some time to resolve any problems or any issues that you may see. If the closing disclosure doesn't match your original loan estimate or isn't close to it, then you need to speak with your agent or your lender to find out why. Now, 1 or 2 days before closing, we recommend that you do a final walkthrough as far as an inspection of the home. Do that with your agent to make sure that the house is in the same condition that it was at the time of the offer. And if there were any repairs to be made, you want to make sure those were completed as well before the closing. If you need to, we recommend that you get a cashier's check for your down payment. Another important suggestion is that you call the utility company and arrange to have the utilities transferred to your name by the closing date. Now, on the closing day, you will meet with the lender or the title company to sign your mortgage papers. Be sure to give yourself enough time to read all the documents and ask many questions or as many questions as you need to be sure that you understand the terms of the loan. You will be signing many binding contracts, so it's important that you understand what you're signing. We're going to go over the most common documents, and they include your closing disclosure. Now, this form discloses final terms of the loan, and it's an itemized list of all the services provided and the fees charged to both you and the seller. You then have the mortgage note. You have the mortgage itself. It's a document that's used to secure the mortgage note. Now, it recognizes your ownership of the property, but it gives the lender the right to claim the property if you fail to meet the terms of the note. You have affidavits, you have the deed, you have title insurance, title abstract, and title abstract is a summary of public records to relate to ownership of the property. You also have a survey of the property. And what's really important that most people don't know about is an escrow analysis. Now, this provides detailed information on your escrow account. An escrow account is an account that is set up by your lender to pay certain property related expenses, such as property taxes and insurance premiums, all done on your behalf. So, as we previously mentioned, this will probably be the most expensive purchase you'll ever make. And our hope is that you feel prepared to take this exciting step. Now, I know we've covered a lot in a relatively short amount of time. However, our goal is to give you the tools and the information that you need to help you to develop a personalized plan, which can save you time, money, and stress when you decide to buy a home. So if you have any questions, please contact our member service center or visit us online at marketusafcu.com. So again, on behalf of the credit union, thank you for spending time with us, and we look forward to providing you with more webinars like this. Again, thank you, and we'll see you next time.